Welcome to the session on income method from the unit National Income Accounting. I'm Tejinder Khosla. I've been teaching economics for more than 30 years. I was heading the economics department in a leading institution in Delhi NCR. In this session, I'll first discuss various sources of income with the help of a flow diagram, steps for calculating national income by the income method, and some important points to remember while calculating national income. Finally, we'll do a numerical example. For the purpose of national income accounting, there are broadly two sources of income. First, income from work, and second, income from property and entrepreneurship. Income from work can be categorized into two. First, when we work for others, we call it compensation of employees, COE. And when we work for self, that is when we are self-employed, the income generated is called mixed income of self-employed. Income from property and entrepreneurship is also called operating surplus. Now let's discuss in detail the components of income from work. So compensation of employees can be categorized into three: wages and salaries in cash, wages and salaries in kind, and employers' social security contributions. Wages and salaries in cash are contractual monetary payments made by the employers to the employees, and it includes basic salary, dearness allowance, house rent allowance, leave travel allowance, bonus, and commission. Wages and salaries in kind are the non-monetary payments made by the employers to the employees, or the benefits given by the employers to the employees. It includes free accommodation, free telephone service, free car service, free newspapers and journals, etc. And a very, very important component, uniform for the defense personnel. Employers' social security contributions are cash contributions made by the employers for the welfare and security of their employees. And it includes insurance premium paid by the employer, provident fund contributions, gratuity, etc. Mixed income of self-employed is the income of the unincorporated enterprises in the unorganized sector. This sector does not maintain any proper accounts. The income generated in this sector, therefore, cannot be segregated into the components of COE or OS, and thus is a mixture of all the factor incomes. India has a large unorganized sector, therefore, MISE forms an important source of income in India. The example of income of the farmers is important. Operating surplus can be categorized into two: income from ownership of property and income from control of property, or income from entrepreneurship. Income from ownership of property includes rent, interest, and royalty. Rent is the income earned by the landlord or the owner of buildings. Rent also includes actual and imputed rent. Royalty is the income earned from the ownership of subsoil resources like mineral wealth, etc. It can also be earned from copyright, patent rights, and trademarks, etc. Interest is the income earned by the owner of the capital by lending out his capital in the production process. Profit is the income of the entrepreneur which he earns for risk-taking and uncertainty-bearing, and it has three components. First, dividends, which goes to the shareholders. Second, corporate tax or profit tax, which goes to the government. And third, undistributed profits or the earnings retained by the firms for further upgradation. Let's discuss the steps for calculating national income by income method. Step 1 is the same as that of value added method discussed in my previous video. That is, identifying and classifying the producing enterprises into primary, secondary and tertiary sectors. You need to know the definition of all the three sectors. Step 2 is identifying and classifying the factor incomes or factor payments into COE, OS and MISE, and then adding them up to calculate domestic income or net domestic product at factor cost. So NDPFC is equal to COE plus OS plus MISE. In step 3, we calculate national income or net national product at factor cost by adding net factor income from abroad to domestic income. So NNPFC is equal to NDPFC plus NFIA. Note that when you get a theory question on the steps for calculating national income by income method, we have 3 steps, but for numericals, you have to remember only 2 steps, step 2 and step 3. This brings us to some important points that we need to remember. First, uniform of the firms is intermediate consumption and not included in national income. For example, uniform of the guards, of doctors, of nurses, of the fire department, of the coal miners, etc. All these are considered intermediate consumption and is not included in national income. On the other hand, uniform of defense is a part of wages and salaries in kind and therefore included in national income. Private pension or retirement pension or simply pension is part of compensation of employees and therefore is included in national income. But pension paid to the employees after retirement is treated as deferred income and therefore it is not included in national income. Old age pension is a transfer payment given by the government to old people beyond a certain age and therefore it is not included in national income. Dearness allowance, DA, is a part of compensation of employees and therefore is included in national income, whereas travel allowance or TA and entertainment allowance both are intermediate consumption and therefore not included in national income. Employers' social security contributions are a part of compensation of employees and therefore included in national income, whereas employees' own contributions to social security are paid out of their own wages and salaries and thus they are not added separately while calculating national income. Let's do a numerical example. Calculate national income NNPFC from the following data. These are the entries given to you. Pause the video for a few seconds and read the entries carefully. Let's discuss the answer now. National income is the sum of domestic income and net factor income from abroad, and domestic income is NDP-FC. So for calculating domestic income, we add all the three factor incomes, COE plus OS plus MISE, and then to domestic income we add net factor income from abroad. So NNPFC is equal to COE plus OS plus MISE plus NFIA. We write the formula in the serial numbers of the entries. So NNPFC is equal to entry number 5 plus 7 plus 4 plus 1 plus 8. We substitute the values and get the answer for national income as 1,640 crores. There are some important points that you need to remember for this numerical. First, old age pension is a transfer payment and therefore not added, as transfer payments are never included while calculating national income. Second, since wages and salaries is given as an entry, it is to be treated as wages and salaries in cash, and therefore other components of COE need to be added. So in this numerical, we add employers' contribution to Social Security to wages and salaries to get a complete component of COE. 3. Employees' Social Security contributions are not added since they are not included in national income separately. They are already paid out of wages and salaries in cash. And last, since operating surplus already includes dividends, therefore the entry of dividends will not be added again. Hope the numerical is clear and all the steps of calculating national income by income method are clear to you. Hope you found this session useful. If you have any doubts, please leave them in the comment section below. In case you found the video helpful, remember to press the like button and share it with your friends. Subscribe to the channel for more economics concepts and tutorials.